The US Federal Reserve has just changed everything by publishing a paper in which, for the first time, they publicly discuss the possibility of revaluing the gold reserves. This is currently causing quite a stir, because Cynthia Loomis has repeatedly advocated here that gold should be revalued, and then later use that to buy Bitcoin. The next step would be to sell off all the gold, send Bitcoin to Valhalla, and leave the competition in the dust. Is this plan actually becoming reality now, or is it all just hot air? We also have top analysts who expect that we'll see a 50 basis point rate cut here. We have Mike Novogratz, who is predicting a 400 trillion Bitcoin move here. Additionally, Bitcoin was pumped up to over 115,000 US dollars last night. Bullish, let's go. Let's dive into all of this, but first, hit that like button below for higher Bitcoin prices, all-time highs, peace, freedom, and decentralization. I'm going full throttle here, so please take a second, hit the subscribe button below, or send this video to a good friend so this message spreads and Bitcoin keeps moving further into the mainstream. As a small thank you, I'll also show you my fiat money here. This is how much fiat money I have right now. Pretty cool, right? And I just came across a really interesting assessment from a so-called top analyst. I mean, that's always pretty subjective, what's considered top and what isn't. But here, Benjamin Cohen, who sometimes gets millions of views and more, writes that it would make sense if the Fed cut interest rates by 50 basis points at the next FOMC meeting. Unemployment rates are trending upward, 4.3%. The number of initial claims rose seasonally to 263,000 job openings. The available workforce also looks good. Here, the 2-year yield, that is, the yield on US bonds, is 1 percentage point, or 100 basis points, below the Fed funds rate, meaning the Fed's interest rate. Normally, it's above that, so this is very unusual. And then, to conclude, a 50 basis point cut is still restrictive. That means even if they were to lower interest rates by half a percentage point, the key interest rate would still be above the 2-year yields and, from the market's perspective, would still be restrictive, so still too high to really stimulate the economy. So it's more in line with what Donald Trump also represents, this, let's say, philosophy or this view of the markets. And of course, that was bullish for the markets. But clearly, we also have to honestly say that this is not what the market is currently seeing. The market clearly expects a 25 basis point cut, and over the whole year maybe 3 to a maximum of 4 rate cuts, because right after that, Hunter Hosley from Bitwise posted something interesting that fits this exactly. Eric Balkunas from ETF Expander first posts here that there are currently 7.3 trillion in money market funds, which I've reported on from time to time as well. And Hunter Hosley simply says, 7.3 trillion is going to be looking for new assets to help store value. As soon as interest rates come down, that's going to happen. And it's pretty wild that this capital will just be released from the parking spot where it's currently lying dormant, and then maybe 10%, 5%, I don't know how much, of these 7.3 trillion could flow into Bitcoin. And even 5% of 7 trillion is already an amount that could definitely move the price of Bitcoin. And now we're really looking at the Fed here. It's honestly insane what's happening right now. And I saw this on X from Carl Menga, who always posts really interesting content. And he says here that the Federal Reserve, the US central bank, is signaling the possibility of a gold revaluation, that is, a new valuation of gold, as a way to get the US debt spiral, the US debt crisis, under control. The paper is also published here. They are going to send your fiat paper notes back to their true intrinsic value of 0 soon. So, they're going to take your fiat money, which, as we just talked about, is basically like toilet paper and already worthless, and reset it to its intrinsic value of 0. Or put another way, this is basically the foundation of fiat money. This is what dollars and euros are created from. Get yourself as many hard assets as you can while you still can. And of course, the thing about intrinsic value isn't actually true. That's a joke. There's really no such thing as intrinsic value. I've explained that often enough already, so I won't go into detail again now. But now we have to take a look at this paper, because you might be thinking, okay, gold, what is he talking about? What's he going on about with gold? I mean, I want the Bitcoin price to go up, not the gold price. Yeah, but this is super relevant for the Bitcoin price, because Cynthia Loomis has already hinted that if they revalue the gold reserves, then you could even, without doing it at the taxpayer's expense, actually do it budget neutral or tax neutral. Just like Bahians always says, you have to find tax neutral ways to accumulate Bitcoins. Then you could buy Bitcoin here, and then the next plot twist could happen, like Michael Saylor suggested, devalue all the gold at once, maybe even reveal what's in Fort Knox. Oh, oops, we don't have any gold at all. Now we're all in on Bitcoin, and we're about to go through the game theory here, because this is going to get super interesting. But before that, we have to mention that this paper actually isn't brand new. It's from August 1st, 2025. but now it's really taking off again on social media. And now I have here, well, if this is all too much for you, you can of course just zoom out again. I took advantage of the attention this is getting right now and thought again about what this could actually mean. And in a moment, we'll take a look at what this means for the price of Bitcoin. But first, let's take a quick look at the paper again to see exactly what it says, because that's really important. I mean, it's just like with everything else. For example, if you do a study in the EU about an asset register, sooner or later you might have to start confiscating assets, or at least have a plan for it. You don't just do a study or write a paper like that for fun, for the joy of it, or just for kicks, especially when it's an official institution, so to speak. So there's usually some kind of background to it. And if we just take a look here, here's the official text, Official Reserve Revaluations, the International Experience. So basically, this report is about what has already happened globally and what possibilities there are. And I had this translated into German for myself. We can quickly go through the interesting parts here. Since public debt is at a high level, some governments are starting to look for ways to finance additional spending without raising taxes and without letting existing public debt continue to grow. One option is to use proceeds, attention, from revaluation gains on gold reserves, as has recently been considered in the US and Belgium. So, people are also talking about the fact that this has already been considered, that it is definitely a possibility. For the US, this would mean revaluing the government reserves of 261 million troy ounces, the world's largest gold reserves, from a statutory price of $42 up to $3,300. And of course, these are huge, let's say, unrealized gains that currently exist, which would then be realized. And then, in the next part, it basically goes into where this has happened before, where it has been applied, whether it worked well or poorly. Here, I specifically looked up the passage where it says in the original, central governments have drawn on revaluation proceeds to retire existing debts under exceptional fiscal circumstances. So, when a country was really under pressure, these measures were used to simply get the country back on track. And then there are all sorts of different examples. Lebanon, and in some cases, wasn't Germany also included? Various countries. You can read it all for yourselves, just go to the Federal Reserve homepage, the document is actually there. And now it gets super relevant. First of all, we have to say, this isn't an official announcement that this has happened, it's basically just an investigation into whether it would be possible. But again, if they're investigating this, they're not doing it out of the blue, there's always some kind of ulterior motive. And now, pay attention. What if the following happens? And we've already heard the bold plan from the Russians, who published it, the plan of the USA. What if they're actually way smarter than we all think? That means we have 10 steps. Step 1. We revalue gold. Massive unrealized gains are now realized, and suddenly the US has new money. And what do they do with this money? Of course, they don't buy just any random, let's say, pointless things. They invest in a neutral reserve asset. But they don't go for gold, they go for Bitcoin. Because Bitcoin, of course, has much greater monetization power, and even higher. So, step 1, revalue gold. Step 2, buy Bitcoin. Step 3, and now it gets really interesting. What could you do next? Naturally, you take all your gold, sell it, and dump it on the market. Before that, you could even push the gold price up again, maybe create a little pump or something, so that gold really, let's say, gets pumped up. Then you sell your gold. You do that pretty aggressively, pretty quickly. At the same time, you could pull off a stunt like, just for fun, a live audit in Fort Knox, and say, guys, we don't actually have any gold. Of course, that would massively shatter trust in the gold market if you dump such huge amounts onto the market, if you say there's no gold in Fort Knox, and so on. People might realize that, of course, the gold system can also be manipulated by central banks and much more. And now you have the situation where all the BRICS nations are relying on gold. The USA, on the other hand, has bet on Bitcoin. That's exactly what Trump's Russian advisor said as well. The USA is betting on Bitcoin here, aiming to get debtors into stablecoins and then devalue these stablecoins and debts against Bitcoin. So, now listen up. Then they sell off all the gold pretty aggressively and get even more money. What do they do with that money? They had already bought Bitcoin before, and now they buy even more Bitcoin. That means, step 4, buy even more Bitcoin. Step 5, the BRICS are completely screwed. They're totally done for. Now the USA has achieved exactly what it wanted. They remain the dominant player. They might not have the US dollar as the monopoly for money creation anymore, but now they have this new neutral reserve asset and are the first movers here, the ones with the most money in this space. That means now they have the Bitcoin, just like Donald Trump recently said, the one who has the most gold makes the rules, and in the future, it'll be the one who has the most Bitcoin. They'll be the ones making the rules, not in the Bitcoin network itself, but they'll have the monetary power needed to be a major nation. So, step 5, the BRICS are absolutely done for here. Step 6, the USA remains dominant here. And now things get ultra exciting. Step 7, the BRICS are so messed up now, they realize, shit, we bet on the wrong thing. Just like China, for example, back then, opted for silver instead of gold. In the same way, the BRICS are now betting on the wrong horse again. Step 7, but they realize, shit, our gold is no longer of any use to us because everyone wants Bitcoin. The US now has too many Bitcoin, we have no Bitcoin. Shit. We are the last movers here now, so we need to start buying Bitcoin aggressively. What happens? The Bitcoin price continues to rise. What happens? The USA has the most Bitcoin. The other countries are pumping up the USA's bags, which are already loaded anyway. Even right now, that's already happening. Many also assume that if you want to execute this plan, it's best to already have secret reserves that you're slowly building up now. Step 8, the Bitcoin price rises to several million, maybe to 10 million, maybe to 5 million. I don't know it. Step 9. And now things get really exciting. Now this is exactly what the Federal Reserve is currently discussing. You take your Bitcoin. Either you keep them, essentially holding onto your Bitcoin to pay off your debts, or you sell Bitcoin to pay off your debts, which in my opinion wouldn't be a very smart option. And step 10. Welcome to Valhalla. We have the ultimate Valhalla candle. We've just gone through the most intense monetization process we could ever experience. Bitcoin is now worth several million, maybe 10 million or even more. The US has loaded up their bags, but they still can't control the Bitcoin network. That is still determined by the players. You, me, and other people can influence the Bitcoin network if they run their own node. And yeah, for all I care, the US can have 2, 3, or 4 million Bitcoin. But like I said, that doesn't break Bitcoin or anything, but it would definitely keep the US in a dominant position in the world. And I think that's an interesting scenario. Does it have to happen 100%? No. Could it be planned? Yes. Even if it is carried out, it could still fail. Because it could also be that other players are front-running here. It could be that Russia already has 1 million Bitcoin. Who knows, maybe they just haven't made it public, and so on. Of course, there are a lot of pitfalls here. That's one possibility. Feel free to write in the comments below whether you think that's realistic or if you think it's just pure fantasy. If you still want to buy Bitcoin, check out 21 Bitcoin. A lot of people from the community, I know, are really enthusiastic users of 21 Bitcoin. Here you can easily buy Bitcoin. Simple, secure, and Bitcoin is also regulated in the EU, in Germany. So take a look below. An Austrian company even partnered here with the VR Bank of Bavaria. Use the code BitcoinHotel to save up to 20% on fees when buying Bitcoin. Guys, see you soon. See you then. Peace out.